Now, friends, let's move to the form 3CD, that is tax audit report form. In tax audit report form also, there are various details which are relevant from the GST perspective. When we go to clause number 4, it specifically asks us to give the details of the registrations under various statutes which are being taken by the SSC. This will cover GST registration number or import export code number of the SSC. As a tax auditor, I am responsible only to verify that those GST number or I import export code number is actually existing or not. As a tax auditor, I am not responsible to comment on the fact whether any other registration was required to be taken by the SSC. For an example, the SSC may be supplying goods from UP state. However, he has given me the GST registration number of Delhi state only. So, as a tax auditor, I am not responsible to comment on the fact whether he should have taken registration in UP state as well. Now, when we go to clause number 10, it specifically asks us to give the details of the business, as in what is the nature of the business of the SSC taxpayer. Those details should very well be verified with the GST registration as well, because under GST registration, we mention the details of the HSN codes and description of the goods or services in which the SSC taxpayer will be dealing. So there should be a proper matching of those things. When we go to clause number 18, it specifically asks us to give the details of the depreciation which has been claimed on the fixed assets. Now, mind you, if in case a depreciation has been claimed on the GST amount as well, which is being charged by the supplier of the SSC, as in our supplier has supplied the goods of 100 rupees plus 18 rupees GST he has charged. If the SSC has claimed GST of rupees 18 as an input tax credit, he cannot claim depreciation on rupees 18, and depreciation is limited only on rupees 100. Similarly, we need to verify whether the GST has been discharged on the various fixed assets which are being disposed. When we go to clause number 21, it specifically asks us to give the details of the personal expenses. Now, those personal expenses which we are going to furnish in the tax audit report form will be used by the tax officer to verify whether input tax credit has been reversed on those particular personal expenses. Because when we go to GST law, it specifically says expenses in the nature of personal consumption are not eligible for input tax credit. Now, if in case we have furnished certain details here in clause number 21 as a personal nature expense, so those details will be verified by the tax auditor to get the input tax credit reversed. Similarly, under clause 21, there are certain details of foreign payments which are required to be reported. As already discussed, that in case of foreign payments, we need to ensure that from GST perspective, that input tax credit, as in the reverse charge mechanism liability, has been discharged by the SSC or not, and similarly, input tax credit, if eligible, has been claimed by the SSC or not. When we go to clause number 41, it says that the details of the taxes which are being refunded or demanded has to be reported. When we go to the details of the taxes refunded, we have to give the proper details of the various GST refunds which are being claimed by the SSC and accordingly furnish those details. In this regard, when we go to ICAI guidance note, it specifically says that details of all the taxes has to be given, and accordingly tax will also include cess. So there may be a case wherein SSC has taken a refund of compensation cess. In that case, I am required to report the details of those compensation cess which are being refunded to the SSC. Now, finally, moving to clause number 44. Clause number 44 has been inserted very recently, as in it was required to be furnished in the last tax audit report also, and now in the current tax audit report, which is going to be filed for financial year 22-23. Now, this form, as in this clause, specifically requires us to give the details of the breakup of expenses which are being incurred while having a transaction with a registered vendor and with an unregistered vendor. Now, there may be certain cases wherein it qualifies to be expense, but it doesn't qualify to be a supply under GST law. For example, there may be a depreciation which is there in the books of account of the SSC. In that case, as a tax auditor, I am not supposed to verify whether the breakup has been given correctly or not, because breakup is in any case not applicable to to this particular transaction. Depreciation, because a depreciation is not a supply under GST law. A depreciation is just a accounting expense which is being recognized as a non-supply item under GST law, and accordingly the tax auditor is not supposed to verify whether the breakup of depreciation expense has been given or not. The transaction should actually qualify as a supply under GST law. There may be certain other cases like provision of expenses. The provision of expenses are not a supply under GST law, and accordingly those details are not required to be furnished, as in the breakup is not required to be furnished in clause number 44. Now, there can be a vice versa case also, wherein a certain capital expenditure has been incurred by the assessee, and the capital expenditure has been capitalized in the books of accounts, and it has not been routed through the profit and loss account of the assessee. However, since this clause is asking for the GST details, in that case, I am, as a tax auditor, is required to verify whether the capital related expenditure have been reported and the breakup has been given, even though the same may not be there in the P&L account of the assessee. But as a tax auditor, I need to ensure that the breakup has been given by the assessee or not. Now, finally, since we have discussed all these parts, there is an important thing which is being there in the ICI guidance note also. ICI guidance note specifically says that for the purpose of clause 44, there should be a proper control sheet or working sheet at the GSTN level, which should be maintained by the SSE. I'm going to give the details of that particular control sheet in the format in which it is required to be prepared by the SSE taxpayer in the description box of this video. Now, this clause 44 requires us to give a breakup of the registered and unregistered expenses, and as in what all expenses have been taken from a registered vendor and what all expenses have been taken from a unregistered vendor. Now, the registration details, as in, has to be checked at the time when the expense was incurred. There may be a case wherein the assessee was actually taking a supply from a registered vendor in financial year 22-23. The registration has been cancelled in, let us say, June 2020-23 of that particular supplier. So as a tax auditor, my responsibility is to ensure that at that particular point of time, when that particular transaction was being undertaken, the SSE, as in the supplier, was actually registered or not, and accordingly the breakup has to be given. The current status is not relevant. The status at the time when the transaction was being undertaken is relevant for the purpose of clause 44. With this, I am closing this video. Thank you very much for watching. I request you to please subscribe and like this video. Thank you.